Great information. That was excellent. Kent and Bill, I appreciate that. Excellent information. It's a unique situation we're in today. It's interesting, as Bill mentioned, trying to update a set of slides is difficult. I've updated some slides while those two were talking in my presentation today. Things are moving quick. A week is like an eternity in this situation. It's an interesting time to talk to your group here. I think back 1 year ago, if we go back to March 18th, 2019, I had returned from a trip to China. African swine fever was still an absolute mystery in China. We were all tracking numbers of cases and plotting the map in China where cases had been found. Nobody really knew for sure what was going on. The USDA had said they were forecasting Chinese pork production down 5% for 2019. And I got back that week. I had talked to a group in China, the China Swine Association, who whispered to me that they thought 1/3 of the Chinese swine herd was already gone. And so we came out, that and some other meetings. I had some pretty good anecdotal information that this thing was way, way, way worse than what the world realized. And we put out our alerts. We sent out our information. Chinese hog prices bumped a little higher that week, and U.S. hog futures blew the lid off. And that's when we sat back and just watched those futures run. That was about a year ago today. And in the hog world, we thought we maybe are never going to have another bad day. And so it's interesting to sit here a year from that point and see where we are. Now, I looked back at my March export forecast. I had forecast, I had a chart, should have left these in, but I had a chart of monthly pork exports to China. And my chart just showed 2019 off the charts high. I said by December, we are going to be shipping over 100 million pounds a month to China, which was, I took some criticism for that, and being kind of a lone voice out there and said, this is for real. We're going to send massive amounts. So I'd forecast 108 million pounds of pork to China in December. The chart looked almost exponential. And December, 3 months ago, that 108 million pound forecast was actually 212 million pounds of pork to China. And so I'm admitting that I was horrifically wrong on my forecast by a factor of half. We sent twice as much pork to China in December as even I thought we could. And so it's interesting as we see the markets, and Kent talks about hog profits and how difficult this year has been and disappointing. The reality is we are sending massive amounts of pork to China. And I'm glad I never forecast prices. I only forecast trade flows. I have export forecast, but not price forecast. So with that, I'm going to dive in here. We've got a couple things to talk about. We're in a situation where we really have two black swans going on. African swine fever, we know, very hardy virus, high fatality, no vaccine, and has now reduced the global swine herd by at least 1/3. Okay, so African swine fever, we all know where that is, right? And then we flip over and talk about coronavirus, highly contagious, somewhere around a 1% death rate, now a worldwide pandemic, only humans at risk. Now, I did read that there were some dogs that they think are infected. But we look at these two black swans, and it's an interesting situation. I feel like I've spent the last year just in this fog of trying to guess about a virus that we really didn't know about from countries that aren't transparent. And now that's kind of what I do every day as well now, although there's a lot more human social impact from coronavirus. So to start off, let's talk first about African swine fever and just give you the rundown and the update. This is a situation that could be very, very, very good for the U.S. Beef, pork, potentially poultry sector, or it could be very bad. Situation in China, the Chinese government kind of quit releasing these numbers, but their low water mark was October. They claimed their inventory was down 40%. They're now claiming some increases, and they probably are having some slight increases. They're now breeding market guilt, and so their sow numbers may be going up. They're showing them up 1 or 2%. The losses are still massive. If I talk to people on the ground in China, the feed groups, equipment, pharmagenetics, A lot of those guys are saying their sales are down 70 to 80%. This is all before coronavirus. The losses could be much bigger than what even we think, and we've got them down 65%. We assume that 65% of the Chinese herd is now gone, which equates to about a third of the global swine herd. Currently, prices are somewhat stable at very, very high levels. The market is doing what markets do. It's trying to ration a scarce resource. And I think we've found the price that rations a loss of more than half of their swine production. Imports are shifting higher. Beef, pork, poultry imports are soaring into China, over $2 billion a month. I'll show you a chart here in just a second. They're now buying, based on my estimates, somewhere around 8 to 10% of U.S. pork production on a weekly basis. 1 in 10 U.S. hogs are being eaten in China. The port slowdowns are improving. Things are moving in China. There's some other odds and ends concerns, but by and large, the product's moving. Traders in China tell me every pound of pork that gets cleared through the port is eaten very quickly. And so things are somewhat resuming. But then we throw on coronavirus. And in China, that has been a major, major impact. And it's been somewhat regional. And I'll talk through some of that as we go through discussion on coronavirus. Food delivery is soared. Food delivery was always huge in China. Every time I go to a meeting, I feel like I'm standing outside a building dodging delivery drivers. There's 30 scooters and 30 delivery drivers, but they have figured out food delivery, and I think we may figure it out here as well. China live hog prices, you can see there, 37 RMB. Now, when this happened, the highest price before ASF was about 21.8 RMB. We were saying, you know what, we could see things go 25 to 30 RMB in China. It went much, much higher. And for perspective, what does that mean to us? 37 RMB per kilo. Well, if we throw U.S. hogs on there, U.S. hogs this week are about 9.7 RMB per kilo. 9.7 compared to 37. Now, you sit and look at this and go, why aren't we sending 90% of our pork production to China? Well, it's complicated. One, this is a fresh price in China. They discount frozen pork significantly. They don't like frozen pork. They like fresh pork. Then there's the tariffs. We still have 25% retaliation. One of those 25% levels was taken off, but we still have one, plus the 8%, plus freight, and plus a lot of government intervention into those transactions that have really limited us thus far. But the market's good. The import market is good. The domestic hog margins are now around $380 per head equivalent. Now, Kent, I wish we had a scenario that we could say, okay, yeah, we know what happens when hogs are profitable to the rate of $380 a head. Unfortunately, we have never even got anywhere near that. I think we would have hogs in the streets of Des Moines, Iowa, if we saw profits hit that kind of level in the U.S. But what happens in China when that happens is you breed every market gilt. And so slaughter rates are actually down in China because they're only slaughtering barrows. The market gilts are getting bred, sold, piglet prices through the roof. The backyard farmers are not leaving. Everyone is pooling money to say, hey, let's take a shot at this. One thing that changes is you can pencil in potentially a 40, 50% death loss and still make money. And so you buy these very expensive piglets. You buy 100 piglets with a few neighbors. You put them on feed, and if you see one get sick, you pull it off and sell it. If you see another get sick, you pull it off and sell it, and you do the best you can. And hopefully by the end, you have at least 50% of your hogs to sell, and you make great margin. It's the Wild West. And so this is not helping them control ASF. It's causing a lot more risky behavior because the profits are so high in China. You can see here what's going on out of Europe. Business is good. You look at post-Chinese New Year, the EU hog prices are moving higher. That's not because Europeans want or eat more pork. It's because of the Chinese buys into that market. The Europeans are flying high right now. They are making fantastic margins farming hogs. One of the main reasons being they didn't increase production 6 to 8% like we did through this. In fact, their production tightened slightly last year and is going to be fairly stagnant this year. and they don't have a trade war going on with China, so they dodged the retaliation. But there you can see kind of what the potential is and should be, really, especially if China takes the phase one agreement in earnest and really makes efforts to buy U.S. pork. Here's where the consumers are in China. This is the average consumer price of beef, pork, and poultry. 1.4 billion Chinese go into the markets and see pork prices up about 164% from where they were a year ago. You can't hide that. That's out there. The food inflation rate is 20%. I'm not quite sure how that works because in the past when pork went up, we saw food inflation at 23% in 2008 with pork inflation up 30-40%. Beef prices through the roof. Poultry prices, not that exciting. The Chinese just, one, do not like poultry that much, and two, maybe have overproduced a little bit through the crisis. But pork prices are through the roof. The shortages are real. You can see it out there. Here's the import volumes, or import values, beef, pork, and poultry. Now, before all of this, Japan was the biggest meat and poultry importer on earth. Japan imported about $1 billion a month of meat and poultry. You can see China's now 2.3 billion, roughly, and still going higher. They delayed their January trade data. We should get January and February trade data together around the 24th of this month. I'm sure we'll see a downtick due to Chinese New Year, coronavirus, port slowdowns. But the word is today product is flowing. They're starting to bid again on some of the beef out of the southern hemisphere. Some of those orders are starting to come through. It's going to stay big. These volumes are going to stay large. So what does it mean to China? Here's my calculation. I show a gap of about 24.5 million tons. That is a massive protein gap. And that's with imports up 73%. I say they're going to buy 2 million tons more pork off the global markets. They're still going to be about 24 million tons short. And so you look at that gap and say, what can they do? Well, they buy more pork, they produce more chicken, they buy a little bit more beef, and they fill about 1/3 or 1/4 of that protein gap. And so the question that just no economist can let go of is what's going to fill the rest of that gap? And after exhausting every other possible option, my answer to that is absolutely nothing. There is no protein supply inside China or outside of China that can fill that gap, that can even move the needle beyond what we've got here. And so what this means, why this is significant, this means those prices are going to stay very high for a very long time. There is no supply to fill that. The Chinese are going to eat way less pork. They're already there. They're not in the streets with pitchforks. There's not going to be social instability over this. They're not going to starve. They're just going to eat way less pork. And I follow this on social media. I have contacts over there. I had a guy say, I haven't eaten pork in 6 months. Pork is in very, very, very short supply in China. The prices reflect that, and that's the new normal. In China, the reality is no one's running for re-election. You know, this isn't a rush to the microphone to talk about how we're going to fix this. This is, hey, things are going to be tough, and that's just going to be life in China. It almost plays into the government plan because in the end you have a bigger, more commercial industry that's probably easier to regulate. And it may take 5 years, 10 years, but ultimately it's somewhat in line with the long-term goals. But in the interim, prices are going to be very high for pork. And unfortunately for the poultry world, chicken is not the answer. You can look at these live hog broiler spreads. They were typically 3 to 5 RMB. Pork was about 3 to 5 RMB above broiler prices. Now look at where we are today. I mean, I just look at that and go, how bad do the Chinese hate chicken? They really don't like it. That's part of it. Part of it is during the crisis, they overproduced. I don't know if some of you may have seen the hog farmers filling their hog barns with broiler chicks. There was a big rush to broiler chicks. It just didn't really take off. Now, there's going to be a lot of volatility. They overproduced. They'll put people out of business. They may underproduce. The U.S. is not expected to ship a lot of chicken to China unless those prices really take off. We're sending a lot of feet. They're buying all the chicken feet probably they can get right now. Those are a high margin item. They do love chicken feet. They really do not love chicken in China. And I've known that for years. I've eaten chicken feet in China under enormous pressure. I've never figured that one out. There are a lot of mysteries in China that are just going to be mysteries, but they really don't feed chicken. Can they recover? Well, the government's optimistic. They've said we're going to recover and we're going to do it by 2021 in the hog sector. Problem is, all they have is optimism. They're throwing out edicts. They're ordering the media to write articles about how good they're managing ASF. When you read those articles are going to get reprinted by U.S. news outlets, Reuters, Bloomberg. We're going to see these articles coming out of China talking about how they're recovering from ASF. When you read those articles, remember that I told you today, the news media in China has been ordered to write those articles. So be cautious what you believe as you see media coming out of China. They said they want to restore normal supplies in 2021, and they said that's probably 70% of normal. That's far from normal. That's relying 30% on imports, which is 16 million tons, which is 2 times the volume of global pork trade today. Bottom line, there's no real answer here, right? This thing is going to last for a long time. What does it do to our hog markets here in North America? January, we exported 26% of production. December was 28%. We are exporting a significant amount of pork. Here's what we're shipping to China. You can see those big volumes there. This is based on the weekly data. This data is not complete. It's probably a little higher than what we're seeing right there. But this is a massive amount. The problem is we increased from 2% of production to 8 or 9%. So 7% increase in our production going to China, but then again, we increased production 7% over the last 5 or 6 months. And so China has had no real impact on the upside. However, were China not buying this, we would definitely know the impact of China because our prices would be significantly lower in the U.S. China really is the key driver. They've had a strong economic incentive to buy U.S. pork. I showed you the prices. With the Phase 1 deal, they now have a strong political incentive to buy U.S. pork. We'll see where that goes. They've granted the tariff waivers. I'm hearing that those waivers were thrown out to many companies. Again, those tariff waivers still have one round of 25% retaliation. So there's still a 33% tariff. The math still works. The government has intervened in those in the past. When they've issued those waivers, they've required those companies to cap their price of selling that pork into the market. So it isn't true profit potential yet. But so far, if you follow the Phase 1 agreement, they're following their commitments. They just made the revisions to the beef residue, hormone residues that they said they would make by March 14th. They just made that right on track. There is a potential. The price is high. They need the pork, and they have made a major commitment here. We'll see. We'll see where that goes. So here's my forecast on pork exports to China. And I show that chart, and the initial knee-jerk is that's ridiculous. That's an enormous amount of pork to China. We're going to send twice as much as we ever sent to Mexico. The reality is that's the rate we're shipping today. We're shipping 10 to 11% of U.S. production today. That's about where that lands us. So that gives us a 33% increase in U.S. pork exports. Now, 33% increase says, wow, we should light these markets up. The problem is when we look at the increase in production, we're going to increase exports 2 billion pounds. We're going to increase domestic U.S. production 1 billion pounds. So that only leaves a net short of 1 billion pounds divided by 330 million people. That's 2.6 pounds carcass weight, or somewhere around 1.8 pounds retail weight. 2 pounds off the U.S. market does not really justify $100 hogs. It doesn't even justify $85 hogs. And so the numbers are fantastic. The reality is our production has pretty much absorbed most of the opportunity thus far. So we shift gears. ASF, as I said, could be fantastic for us. ASF could be an absolute disaster for us. And if we find it in the U.S., the real problem is export markets close instantly. Does China close? Absolutely. I think China closes, no questions asked, if we found ASF. China has closed to every other market around them that had ASF. This would give them enormous leverage. They would be completely within their rights to ban us. It would give them leverage in negotiations. but everyone would ban us. Japan, Korea, all those markets would likely close overnight. It would take a couple weeks to really figure out what happened. For those few weeks, we would have way too much pork. We export now 26, 28% of production. What if Canada found it? They export 68% of production. They understand. I've spent a lot of time with the Canadians over the winter. This would end their industry. If they got ASF and the U.S. banned Canadian pork, they probably would not recover. And this is possible. This is a virus that's moving around the world every day. It's a very, very difficult situation. Many of those markets would stay closed. Canada, Mexico, maybe they would regionalize and buy from non-affected states. The reality is, with our biosecurity, massive culling is not the risk. We wouldn't lose 65% of our herd. Our biosecurity is infinitely different than it is in China. I think we could manage it quite well. It's not even a highly contagious disease. But exports are the risk, and just the absolute supply of pork on the market would be devastating. So I have just 2 more slides here, and then we'll talk about coronavirus. I didn't know quite where to put this. I wanted to just mention the beef markets are a bit in a shift right now as well. And what's happening here on this slide is the Australian drought is likely broken now. Now, the Australian drought led to about 20% of their herd being liquidated. And as they liquidated that herd, they flooded the world with beef. Most of that excess beef went to China. As this thing takes off, as they get rain, and they're getting serious rain in Australia now, everyone's rushing to restock cattle. As they restock cattle, beef output falls and prices go through the roof. We're looking potentially at prices by fall being double what they were a year ago in Australia. And so what that means, sharply falling Australian output. Australia is our main competitor in Korea and Japan for beef. We're going to have export tailwinds blowing fantastically in our favor in the beef market through 2020 and 2021 because of this situation right here. And so the Aussie beef output's going to fall sharply. Prices already going through the roof. This is good news on the export front for the U.S. beef industry. All right, let's shift over and talk about the coronavirus. Maybe a few of you have heard of this. No. Actually, here's the question I get most. The question I get is, how's coronavirus going to impact our markets, our beef, pork, poultry markets? And here's my answer. My answer is the coronavirus is probably insignificant. You probably can't even gauge the impact on our markets from coronavirus. Virtually no impact. Now, if your question is, what is the impact of our reaction to the coronavirus on our markets? Oh yeah, that's completely different. Here's what coronavirus started at. It started as an unknown disease in Wuhan, China. So here's the virus in different countries. You can see there outside of China. These are the key nations outside of China that have it. You can see the U.S. number right there. We had a pretty good uptick overnight. As Bill mentioned, we're still in the growth phase here. This is going to go way higher in the U.S. We're going to see cases go significantly higher. New York announced, I think, 750 new cases yesterday from the day before. But you can see the different reactions. Look at Italy versus Korea. Here's the Korean reaction. Here's the Italian, their response. Italy's in trouble. I think Europe faces some real problems over this. Korea's interesting. Let's look at Korea. Thus far in Korea, 1 out of 180 people nationwide have been tested. In the U.S., we've tested 1 in 13,000. Korea, they didn't just test sick people. They'd set up on the side of the road, pull out a digital thermometer on your forehead and stop every single car and test everyone. Test healthy people, sick people, everyone. And if you had a fever, they pull you off. I mean, they went very manic on this. Most expansive, well-organized testing program in the world. Keep in mind, Korea is our only example in modern history of eradicating ASF. The same thing. They just completely overwhelmed it. They tested, they culled, they did whatever it took. We're not doing that. Notice, Korea doesn't even have lockdowns. No lockdowns in Korea. They are just testing and they're reporting everything. If you get infected, they'll get your cell phone data, they'll get your social media data, credit card data, and they'll show everywhere you've been as an infected person. They don't announce your name, they just report online wherever all the infections are. They do have some new clusters. There's a cluster now in Seoul. The original cases were in Daegu in southern Korea. Seoul is 26 million people. But this just shows you what can happen with serious control. Here's the cases inside and outside of China. You have to ignore that big blip. China did a one-day odd reporting number. Bill showed this very well, how those cases peaked and then declined. And you look there and you go roughly 6 weeks to 2 months from the outbreak to where they fall. And I can't explain why they just quit in China, but they just quit. The cases just quit. Daily cases outside of China, you can see that number soaring. Here's just the absolute number of cases outside of China has now surpassed what's happened in China. Really, outside of Wuhan, China has had a very, very low significance. You saw 1 in 12 million dead from the virus outside of Wuhan. So what's their impact? It definitely slowed their economic activity. The lockdowns were not just mandatory. Lockdowns were never mandatory in Beijing and Shanghai and some of those other cities, but they were still locked down. Delivery services kept them all fed. Delivery went through the roof in China, and they managed it. They found the drivers. The restaurants stayed open. It sounds odd, but I think we're heading to that direction now. Drive-through, McDonald's said they're closing all their dining areas, drive-through only. We're going to have a lot of drive-through. We're going to have a lot of restaurants that are going to be dealing with delivery or pickup. Americans are still going to be eating 3 meals a day, right? I think the restaurants that can figure this out have a lot better chance of survival than the ones that don't. Grocery stores mostly remained open in China. I know we may see a point where some stores close in the U.S. I think we can probably keep most stores open. Beef and pork prices soared, but they had a massive protein gap. We are not in a massive protein gap, as Kent showed us. We have plenty of protein, too much protein. So we're in a different situation. Any slowdown in domestic demand, we are going to feel painfully in the markets. Port congestion, that's slowly returning to normal in China. Here's just some charts on China. Here's auto sales, just seasonal. You can see here compared to 2017, 18, 19, here's 2020. Auto sales are still about half what they were. Subway riders in Guangzhou, about a fourth of what they were. Beijing traffic congestion index, you can see traffic's coming back. Still not there yet. You look at the cameras of the traffic in Beijing. I have people send me pictures of the traffic. It looks somewhat normal. I mean, the highways are backed up. Here's coal consumption in China. You can see what happened with coal consumption. It's recovering. Things are somewhat returning to normal. One other thought here, and our colleague Simon Quilty, he's our colleague in Australia that's doing work with us at AgriTrends. He follows the global beef markets very closely, and he's put out some analysis on seasonal considerations. The seasonal assumption is that the virus survives less in warmer temperatures, and so the southern hemisphere, if you look at the outbreaks, are lower thus far, but again, the southern hemisphere maybe isn't as good at reporting. Do we start to see an oscillation? Do we see where the northern hemisphere struggles with this in the winter, and then over our summer, the southern hemisphere struggles with this? There's something to think about there, but keep in mind, 88% of the world population lives in the northern hemisphere. However, 55% of global beef exports originate in the southern hemisphere. So if we do see outbreaks, we saw the news that the plant in Brazil, some of those plants are going to be closing down over coronavirus. They may get worse here in the next 6 months. I don't know, just something to think about. Futures markets are pricing in the worst, right? It's a fleet of safety. There's capital fleeing from those markets, but they may be trading this story as well. We could see plant closures. An employee shows up at a packing plant and says, I'm sick, halfway through the shift. Well, the state officials come in, interview him, interview every person that was working on that shift, and potentially you lose your fab line. That is a very distinct possibility in this situation. What happens if we start seeing plants close down? Cattle, hogs, chickens, back up fast. There is no room for error here. The farrowing pigs have got to go into the growing phase. The growing pigs have got to go into the packing plant. There is no room. So markets would fall sharply. This is something to keep a very close eye on. I've heard of plants that are actually going to take temperatures daily. When the employees arrive, they can take their temperatures on arrival. That's a fantastic idea because then you don't have them in the plant before you find out they're sick. We just saw this news this week. Minerva in Brazil suspending some of their operations. 10 to 20 days, they're shutting plants down. That is going to back up animals in Brazil in a big way. This is probably the biggest risk to our protein sector today is the risk of plants shutting down. Are there other contingency plans? What else can be done? I have no idea. If I was a hog farmer, I'd be trying to find a little bit of room in that chain, and it's hard to do that. I can make room in about 5 months. I can't make room next week. And so that's probably the big risk. Here's the unemployment data. I had this chart. I pulled it out and updated it this week. I was running the unemployment data every 2 years in these key processing counties in the U.S. just as a gauge of what's the labor pool. And so this data was based on March data, 2014, 16, 18. We didn't have March for 2019, so I used, or 2020, so I used December 2019. So those red numbers, that's what the unemployment rate was in December. But you look at these counties and go, 2% unemployment. If you have sick employees, how many can you go hire? Not many. I had someone tell me in Woodbury County, Sioux City, Iowa, the comment was, you do not want to be the guy in charge of hiring the last 3% of the labor force. That's not a fun job. 2% in Finney County, where National Beef is in Garden City, Kansas. Weld County, Colorado, 2.3% unemployment. So the employment deal's for real. There's no help. Now, unemployment may go to 20%, according to Treasury Secretary Mnuchin. Those employees aren't going to be working in packing houses. Those are going to be waiters and waitresses at restaurants. This is a real risk. What about demand side? Where's our market exposure? Well, our pork ends up, if you say who buys U.S. pork, 25% of that is retail buyers, 25% food service, about 25% last year went exports, about 25% went to ingredients. And you can look and try and assess the risk profile of each of those. Food service, absolute risk. Retail, maybe not. We ought to see retail demand continue brisk. Now, if people get to the point where they're only buying groceries once a week or once every 2 weeks like the Chinese did, they don't buy a lot of perishable products. They buy instant noodles. I don't know if we get to that point. There's our beef side. Food service is about half of the beef. Beef faces more risk of a food service slowdown, retail and exports. So food delivery skyrockets, DoorDash, Uber Eats, those kind of things probably going through the roof. I imagine New York is a good spot to watch here as people lock down. Restaurants that can adapt will survive. Not sure what happens to restaurants that can't adapt. I mean, that was China's experience. They converted very quickly to delivery. So I'm going to wrap it up here. Here's some of the watch list items I'm looking at. Here's the WASDE report data. Huge production growth in beef, pork, and broiler. Huge export growth in pork. So on a per cap basis, if we just run this math, this says we have half a pound more beef per capita in 2020, a little less per capita pork in 2020, and almost 6 pounds more chicken. Where's the risk here? 6 pounds more chicken for every man, woman, and child in America. That's what the WASDE board forecast is. That's serious risk. You've seen breast meat. We can't get wholesale breast prices above $1. There's a reason why. We have 7 new poultry plants operating in the U.S. Lots of chicken. Key items to watch. I don't need to tell you these. This is very obvious. We are absolutely in uncharted water across the country. This is unbelievable. To have the schools shut down, to have work shut down, to have restaurants closing, to limit all gatherings to less than 10 people. There's nothing to compare this to. We got to watch the daily counts of coronavirus. It may hit regions harder. We just don't know. U.S. consumer demand, processing plants, China port issues. Weekly pork exports to China, those numbers continue huge. We're going to see probably good numbers now. They never really even slowed down during the coronavirus or even during Chinese New Year. They're probably going to grow as we go forward. I watch the live hog price every day in China. ASF spreading, those are absolute watch lists. Whew. That felt like a lot.
I think it was a lot. Again, I appreciate being with you today. I appreciate Kent and Bill's comments. We'll go ahead and shift it over. I don't know if we have any comments from the chat box or you want to take questions.